So if the BRICS is successful in the process, first of de-dollarization and then of launching an alternative currency, which either directly or indirectly will be backed by gold, America won't want to see its hegemony being destroyed. So, as in the fall of all empires, actually, other than the British one, which was by diplomacy, it's likely to be a war. And I think the risk of a war by the early 2030s is very real.
The interest of the BRICS nations in creating a new currency to rival the US dollar is tied to their desire for economic independence within the international financial system. While this potential currency is still in its developmental phase, its establishment could challenge the current dominance of the US dollar, which presently accounts for approximately 90% of all currency trading and nearly 100% of oil trading. The ongoing situation, including the US trade war with China and sanctions against China and Russia, is central to this discussion. If the BRICS nations succeed in establishing a new reserve currency, it could substantially impact the demand for the US dollar, consequently affecting both the US and global economies. Simon Hunt observes a significant global shift, interpreting it as the decline of a dominant empire. He notes a coalition forming within BRICS to create an independent system, diverging from the dollar-dominated one. They aim to foster a multipolar world, countering America's unilateral dominance through military and currency power. In July, South Africa's BRICS ambassador, Anil Sooklal, mentioned that up to 40 countries have expressed interest in joining BRICS. Subsequently, at the August summit, 6 countries, Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates, were invited to become BRICS members, set to join the alliance on January 1st, 2024. Simon predicts that if BRICS successfully launches an alternative currency, potentially backed by gold, it could challenge America's global influence. He expresses concern about historical trends where the decline of empires often led to conflicts, foreseeing a substantial risk of war by the early 2030s. Shifting the focus to the economic landscape, Simon anticipates an upcoming recession in the first quarter of the following year. He notes the recent dovish stance of the Federal Reserve, acknowledging an imminent economic downturn. Despite keeping the policy rate steady at 5.25 to 5.5%, the Fed believes slower growth and decreased inflation. He foresees a temporary drop in demand for base metals and gold initially, but expects a robust market rally later in the year due to cyclical patterns. We'll share clips from Simon Hunt's interview with Soar Financially. But before that, if you'd like more videos, please subscribe and turn on the notification bell for updates. Thank you, and enjoy the video.
Yeah, I think it's pretty clear we are seeing the last leg of an empire. It takes years for empires to fail. I mean, really what we have is a group of nations under the banner of BRICS who want to develop a system that is outside the dollar-denominated one, because they all have had bad experiences and they want to develop a multipolar world as opposed to the unilateral world that America has run and has dominated through military prowess and its currency being the sole reserve currency of the world. So if the BRICS is successful in the process, first of de-dollarization and then of launching an alternative currency, which either directly or indirectly will be backed by gold, America won't want to see its hegemony being destroyed. So, as in the fall of all empires, actually, other than the British one, which was by diplomacy, it's likely to be a war. And I think the risk of a war by the early 2030s is very real. I heard the president of Argentina saying we're going to go back to the dollar. Is it going from the fat into the fire? Because on our work, you take the dollar index by 2030, the dollar index will have halved in value. So good luck to Argentina. The second point you have to say is it's very good to talk about the complete restructuring of Argentina. But is he going to be able to get it through the Argentinian parliament? I mean, he's on the easy phase at the moment. So let's wait and see and not jump to conclusions. During the first quarter of next year, America and most of the rest of the world will be in recession. You have to ask the question, why did the Fed yesterday come out to be so dovish? The answer is very simple, that they are seeing what we've said will happen, that there will be a recession, and that the recession will start earlier than a lot of people have been saying. So what are the consequences of that? It means that the current rally that we are seeing in base metals and gold, well, let's say base metals, is probably premature. Demand continues to fall. Physical consumption continues to fall. What we will see the middle of the year onwards will be the real cyclical rally, where we will see a doubling in the price. So coming back to the macro situation, we will see probably either in March or April, certainly in that period, we will see the Fed being forced to pivot, not only because of recessionary trends, not only because that the White House wants to see a strong recovery for political reasons, but also because by then we are probably going to see an extension of the war between Israel and Hamas, going to a war between Israel and Hezbollah. There have already been skirmishes from both sides.
Over the last couple of years, investing in U.S. Treasury bonds has proven disastrous for investors. 2022 stood out as the most challenging year for these investors since as far back as 1788. The trajectory suggests another potential decline in bond prices throughout 2023, which would mark the first time in the history of the United States that such bonds have depreciated for 3 consecutive years. The interest rates on 10-year treasuries have soared to nearly 5%, a stark contrast to their levels just 2 years ago, making them notably attractive to potential investors. Given the recent inflation concerns, there's speculation that if the core fundamental elements dictating these rates haven't undergone significant shifts, interest rates may decrease, leading to a recovery in bond prices. However, unlike this prevalent view, Simon anticipates a different trajectory. He predicts the U.S. Treasury 10-year yield will soar past 5% due to Federal Reserve policy changes. After an initial increase, he expects a temporary drop in yields. By mid-2025, Simon foresees real inflation possibly surpassing 10%, causing 10-year yields to climb above 10%. This could strain the heavily leveraged global financial system, perhaps triggering prolonged recessions or a depression. Let's get back to the interview.
Well, I think the U.S. Treasury market is really the seat of all the problems because treasuries are so widely held in and outside America and in such quantities. I think the Treasury market has been in trouble for some time. The first big problem was in March when you had the failure of some regional banks. I think that the bond market tells the real story. The equity market doesn't always. The long end of the bond market, 10-year treasuries plus, the Fed has very limited control. So it's the bond vigilantes who really run that market. And in America, forget the published CPI numbers and their derivatives. They're all mumbo jumbo. Because back in the 70s, when Arthur Burns was chairman of the Fed, he started playing around with the CPI numbers because he didn't want to raise rates. Most governments since then have manipulated the workings of the CPI. So there's a friend called John Williams who runs an outfit called Shadow Government Statistics that takes back CPI to the original workings, to where they should be today. And in round numbers, in September, October this year, the real CPI number is around 10%. Now, there's another outfit called the Chatwood Survey, which began life in 2017. And the Chatwood surveys 500 items twice a year in 50 different towns and cities. Same items every time. And they're items that households buy all the time. And in the first half of this year, their inflation number was 9.8%. And if you go back for the average since they were formed started in 2017, it's 11.2%. So you can safely say the real inflation that households feel is around 10%, not 2, 3, 4, or 5%. So the bond vigilantes know this, and we will probably see early next year the US Treasury 10-year yield rising to over 5%. When the Fed pivots, either late first quarter, early second quarter, then 10 years will fall again, but in the second half of the year, because the dollar will be falling, official inflation will be rising. The real inflation will be, by mid-2025, be running at over 10%. And we will see a resurgence in 10-year yields rising to over 10%, either by the end of this year or by the end of 2024, or by the middle of 2025. And that will be enough to kill off a highly leveraged global financial system, which will result in what we call 7 years of rolling recessions, or indeed depression.
A move towards a new BRICS currency could profoundly impact the North American economy and its investors. It might pose substantial economic challenges if it gains traction and weakens the US dollar's global dominance. How could a new BRICS currency impact the economy if it diminishes the dominance of the US dollar on the global stage? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.